Construction Investment Club. My name is Ann McNeil, and we're very excited to have everyone here joining us as a part of our National Association of Black Women in Construction Investment Club. And right now, we are going to go ahead and open our meeting with our president, Sharon Jackson. And I'm just going to say a silent prayer, if you will, before we start, so we can have that going on. And I'm just going to ask everybody to bow our heads for a silent moment of prayer, whatever that looks like for you. All right, all right. The trains keep coming and so do the planes. Anyway, on behalf of the National Association of Black Women in Construction, this investment club is supported by the National Association of Investment Clubs, better known as Better Investing, are the tools that we use. We're not selling any stocks. We're not doing any of those activities, just so that everybody understands. We're not recommending any stocks. This is for educational purposes only. And with that thought in mind, I want to introduce our president, Ms. Sharon Jackson. Thank you
much, Ann. So we are now down to the roll call and attendance. So please indicate by saying aye if you are in attendance. Sharon Jackson, I am here. Ann McNeil is already online and has been speaking, so she is here. Nicole Allen just indicated that she will not be participating with us today. So let's move on. Carol and Modest.
Aye.
Is okay, awesome. And now Doretha Dennis. Seems like I've already seen Doretha. Doretha,
Aye.
you're online?
Yes. Aye. Thank you.
Okay, awesome. So much. So the next is asking for guests. We're to ask for the names of our guest. Can you come off mute and we will take your name for attendance.
Hi, it's Mia Ferguson out of Dallas, Texas.
Thank you, Mia.
Warren Gibbs out of Georgia.
Thank you. Do we have anyone else? Valencia?
This is Valencia. I did say, I'm sorry you all didn't hear me. Valencia Gibbs from out of Georgia.
And Sharon, we're losing you back and forth, your voice. And thanks, Valencia. She did introduce herself.
I'm sorry.
Mm-hmm.
She did. She did. I did not hear the first name, so I must have a bad signal. All right, so that concludes the attendance. And next on the agenda, next on the agenda are our reports. Secretary's report.
Okay, our secretary's report was sent out to all members, and we just need an approval.
Okay, do we have anyone to make the motion?
Ann McNeil, motion to approve.
Okay, thank you so much. Do we have a second?
I second it, Doretha.
Okay, is there any discussion? Okay, seeing none. And let us take a vote. No, we are accepting the treasurer's report. Now, the secretary's report. Now, I'm sorry. Do we vote on secretary's report or do we accept secretary's? We accept treasurer's report. So we have taken a motion and there is a second. There was no discussion. All in favor of accepting the treasurer's report, please say aye. I do.
Aye.
Okay, thank you so much. I hear no. Are there any nays? Okay, thank you. Now we're going on to Carolyn Modest report, the treasurer's report.
Okay.
Carolyn, can you hear me?
Yes, I can.
Thank you.
Thank you. I will go ahead and share the report. Which one? Okay.
Okay, I think I need to stop sharing.
Are we seeing the report?
Yes, we are.
Yes.
Okay, thank you so much. Okay, so we did not give me the total in that column. I didn't realize, sorry about that. So this report, the National Investment Club report as of October 31st, 2025, we have collected dues, $1,150 in dues. The assessment, $1,222.54. Sorry, the expenses went out of whack, so it did not, I will get that information later and let you all know what it is because the column was too small. Then we have investment advance payment of $157.16. And when we look to see that the TD Bank, the total as of October 31st, 2025 is $496.47. If I move it across, let me see if I move this across here. And you can see that TD Bank, again, $496.47. Child Squad, the cash is $380.93, giving us a total cash of $877.40. We have accounts receivable of $82.42. Our portfolio as of October 31, 2025 is 15,616.92. And for the record, 2 members was paid out, and that in a total of $4,030.17 for the record. So they were paid out. So that's our treasurer's report as for today. Any questions?
I'll get with you on mine. I thought that I didn't realize I was 2 months because I thought that on the 24th of last month they paid. Maybe I didn't.
I didn't get the check, so we can talk offline on that.
Yeah, we'll do that. We'll do
Thank
that.
you. All right. And I will stop sharing. Thank you.
Okay. So there were no questions regarding the treasurer's report? Do we have a motion to accept the report?
I make a motion that we accept the treasury report as presented.
Okay, and was there a second for that?
Sharon, you can second.
I was getting ready to second it myself. Okay, I will second the accepting of this report. Very good report. Thank you so much, Carolyn. And so I guess all in favor of accepting the report. I have to go back and look at my Roberts rule. Accepting the report. All in favor, say aye. I guess not really voting on, we're just accepting the report. Okay, so now on to the is it the portfolio manager?
Yes, ma'am.
Thank you.
Okay, so we are part of the My I Club, and all of the reports that our treasury has access to, so do our members. And I like to always kind of show just a few of those reports as part of the portfolio's manager's report. This first one is a picture of, or a graph of our portfolio itself. It is a heat map, and it helps us to create new ideas, new stock ideas. It also shows us actual studies that's done by members of Better Investing community. The larger the box, the more studies that have been created. Orange, it ranges from green to red, green to yellow to red. The greener the box, the more potential for a favorable investment. The redder the box, is an indicator of less potential. We want to emphasize that we do not use these colors as an indicator to buy, hold, or sell stocks. Another report I'd like to show is our valuation statement. This is an overview of the number of stocks we own. Let me just move this to the side a little bit. It gives us the date that we bought the stocks, how many shares we own, the price that we paid, the market value, and a gain or loss for this particular stock. We do have about 3 or 4 of them that has a loss. You can see Cactus, which I'll be giving a report on in a few minutes. Qualis, that one I will report on also. And then we have Disney. Our company size is another report I'd like to show. It gives us the size of the companies, and what percentage of the portfolio that they fall under. We have one that's unknown, which is Melrose. I believe it's a small company also, but as of now, it's not identified as a small company in my iClub. We have a 1%. My Melrose holds a 1% of the club. Small Qualis as a 3.9%. We have about 6 to 8 middle-sized companies. They hold a 26% of our portfolio. We have 4 large, 24%, and then we have those mega companies, Disney, Facebook, CVS, and Amazon, and they hold 41% of the portfolio. This is a pie chart of the company size in a diversification format. You can see each of the different companies and how they fall in small, medium, large, and mega, and the percentage they hold. Okay, let's see. Another one I'd like to share is the sector and the industry. We have something called the super sector, and we have sensitive, defensive, and cyclical. It shows how they fall in this particular pie chart. We have sectors, technology, energy, commercial services, health, and consumer secular, and technology. We also show the industry, how they fall in the different industry, a conglomerate of different sectors, industries, real estate, health, entertainment, oil and gas, just a large number of industries. And then these are the companies themselves and what percentage they hold in our portfolio. Like I say, this platform, My iClub, is where we house all of our portfolio, all of the companies in our portfolio. Our members have access to log in and they can see any and all of these reports at any time of the day and any day of the week. So that's going to end my portfolio report or portfolio manager's report. Are there any questions, comments?
I wanted, and I'm not seeing it under the portfolio graphs,
Mm-hmm.
or something that shows how we compare to the S&P.
I believe it's called, let me see, I think it's called maybe global diversifications. Let me just click that and see. Maybe this is not what you're looking for.
Sorry, I didn't mean to,
What
to
is
throw
what is it called, Sharon? I can pull it up really quickly.
I'm looking. I'm sorry.
Club benchmark, probably. Is that it? How how about this?
Yeah, that's it.
Okay. Okay, so we can see our club compared to the S&P 500. Let me just slide this down a little bit. A year ago, the club 9.3%. 3 years ago, a negative 5.5%. 10 years is not here yet. And you can see here at how we compare to the S&P 500. You also show the total stock market comparison. Lifetime to date, a negative 1%. Is there anything in particular you'd like to share, Sharon, with
That,
this?
that was really it. I just wanted to see how we were doing.
Mm-hmm.
I am kind of surprised because I think that we have had we have this year we have made a concerted effort to start really getting rid of our losers. And I don't
Mm-hmm.
think that is really reflected on here yet. So
Right.
maybe when we look at a couple months, we will have a better look.
Okay.
Okay, thank you.
You're welcome.
Okay, Ann's gone or getting ready to drop off.
Okay. Okay, that's it for me, Sharon. Are there any other questions?
No, good job. Thank you so much for that.
You're welcome.
So now we are moving on to the review of the current portfolio.
Okay,
So
go ahead. I'm sorry.
yeah, so what we already know is that Nicole is not here to give her report. Anne has just dropped off. Do you know if Anne sent anything?
Not to
I'm
me.
gonna tell you.
Not to me, she
Okay.
did. Uh-huh.
Be sure to remember to acknowledge. Okay, all right. Very good. All right. So, Doretha,
Mm-hmm.
one, I see that you have three. Which ones are you presenting on today?
Okay, so there has been a lot happening in the financial world. So I'm going to give a quick overview of all three and in-depth conversation about Qualis. So let me do Amazon first because we know that Amazon is laying off 14,000 employees, and there is a comment from their CEO. He said it has nothing to do with AI or their finances. It has everything to do with the culture of the company. When he took over in 2021, uh, he wanted to have a change in the infrastructure of the company. So those 14,000 people that he's laying off are corporate positions, all of those other people that make Amazon work and flow, none of them were affected by this layoff. I think in January, he said there will be an additional set of people that will be he will let go. Let's see what else. The analyst says that long-term investors are okay. They should be okay if you're there for the long haul. So with them, I am recommending a hold. Cactus, we have 20 shares of Cactus. The price today is $35.02. It is a medium company. They operate in the oil and gas industry. Morningstar gives them a B, and they have a dividend of 14 cents. Okay, so Value Line produced an article. It was produced in September, I believe it said. And Cactus has not done well in the first 3 quarters of the year. And analysts are not expecting them to do any better this next quarter. They do have a strategic plan in place where they have a joint venture with a company called Baker Hughes, where they're going to take 65% ownership in the company. It hasn't taken place yet because they're waiting regulatory approval. Last summer, Cactus agreed to become the operator of the company. And Baker Hughes is going to be good for them because they operate mostly outside of the Middle East, where at least 85% of the revenues take place. So this is going to be good for Cactus. Analysts says that if investors are in for the long haul, this may be and willing to take some risk, that this might be a good thing to look at. The recovery potential is there. Perhaps it's going to take 18 months to 3 to 5 year period for this company to really get back on their feet. So if you're into taking a risk and you're willing to take a risk and you're in for a long haul, then this is something you might want to take a look at selling, or you might want to hang on to your shares and stocks. They do have sales. They have a 38% in sales. They have 46% earnings per share, and their return on equity is 16.5%. Debt to capital ratio 5.6. My recommendation is to continue to hold on to the shares that we have, and then just look at them over the next couple of months to see if they pick up. Do they take control of Baker Hughes, and to see if this is going to make a difference in their revenue. My last one is Qualys. Today's price is $146.02. They are a cloud security and compliance solution provider. They help businesses identify and manage their security risk and compliance requirements. They're located in California. They have more than 10,000 customers worldwide, and they were founded 1999, went public in 2012. It is a small company. Morningstar gives them an A for their financial health grade, and Value Line gives them a B. Value Line produced an article in October. This company has shown an increase of 10% last year, this quarter, compared to this year quarter, from $148 million to $164 million. Like I said, a 10% increase. Their earnings per share is $1.29 per share, which also was a 10% increase from last year. The company recently received a certification from from DEA, the United States Drug Enforcement Agency, which gives them a really high an A plus, I guess you could say, authorization. And this gives them access to sensitive, unqualified, listen, unclassified systems that are operated with DEA. Um, Analyst thinks that it is a promising investment opportunity. Let me just give you some final statistics, financial statistics. They have a sales of 8%, earning per share 11%, return on equity 26%, and a debt to capital ratio of only 10%. My recommendation is still a hold. 5 shares. We have 5 shares with them. We're just going to keep an eye on this particular stock to see how things are going for them also. And that is my report for my 3 stocks. Are there any questions or comments?
No, sounds like you did a good job. Thank you for that.
You're welcome.
Carolyn, are you prepared to do any of your stock?
Unfortunately, today, no, I'm not prepared for today.
Man, I'm bummed. I want to hear what you want to say about Melrose Properties. Okay. So let me go ahead with Charles Schwab Square, Western Alliance, and Zoom. So for Charles Schwab, it is currently $94.43. I did not do an SSG, but I did look at the first page. And the first page of Schwab, the lines are up, straight, and narrow. They have a financial strength of A. According to Value Line, they in the next 18 months, it appears that their low can go anywhere from 76 to 115, and their 5-year outlook is $110 and a low of 110 to a high of 165. So there's good upside to Schwab. I am suggesting that we definitely hold it, and when we have the cash, that we buy more shares of Schwab. Everything that I saw was very positive. I didn't see anything that was a negative in return in terms of Schwab. So when we have time or when we have the cash, I would suggest that we buy more shares. Square, which is actually Block, I keep calling it Square, but it's actually Block. And I'm recommending a hold on that. Currently, it is $71.50. It has a financial strength of B plus. The 18-month outlook on a low side is 50, on the high side $135. In 5 years, Value Line is saying the low value of stock will be 125, the high is 110. What they're saying about Block is that it intends, hold on just a second. I didn't write this part down. Well, naturally, Block is it creates a link between the consumer and the merchant, okay? And it was very it rose very quickly. So what they're saying is that Oh, shucks, hold on. What they're saying is that as it goes through, as it continues to move through the market, there's going to be a more of a competitive market force that'll determine profitability and ultimately its stock price and performance. That there's going to be more of a resistance in terms of being able to, there's going to be more other companies that are going to be in the market doing exactly what they're going to do, and that there'll be more of a resistance and it'll be more difficult for them to make money. So for Block, I am saying that there is an upside. They are currently financially stable. They're currently making money. But in the long term, Value Line is saying that there's going to be more resistance. But currently, we are in the green with them. So definitely hold. Western Alliance, or WAL. It is also, let's see, I'm also recommending a hold on that. Currently, it is 78.13. It has a B financial strength. Value Line doesn't follow Western Alliance. But what I have read about Western Alliance is that they're still strong, that they are doing relatively well. They're stable. They're following the market relatively well. Hold on, I'm trying to find out my first page of for Western Alliance. I think the whole point of what I've read is that Western Alliance has been very stable. Even when other financial institutions have gotten rocky, Western Alliance has been relatively stable. It's just that it is not one of those companies that is going to make an extreme amount of money. It's still in the green. It's still making us money, but I'm still recommending a hold. In terms of Zoom, we know really came into its own during the pandemic. It is currently $82.46. It is it's strong financially. It has a B plus plus financial strength. It is, in terms of the 18 months forecast, according to Value Line, it is on the low side is $80 and for $80 up to 108. On the 5-year forecast, low is again $80 and the high would be $120. So what they're saying is that it's steady, that it has continued to that it has continued to grow in the market, that in the first half of this year it grew 6.5% year over year. Zoom has done well consistently upgrading its products. What they're trying to say is that they are upgrading their products. They're going
Did we lose Sharon altogether? Sharon, are you there?
He's actually on mute.
Oh,
This says you can't hear me?
we do now.
Okay, very good. So what Zoom is doing, I didn't say a lot. I saw it when I went off. So Zoom has been providing new products. The Zoom phone, Zoom contact center, and other new products. They're going after larger companies. And what they're saying is that is great. They should be doing that. But what's going to happen is that, during the pandemic, that people started going after Zoom because they're making so much money, they were doing so well. So what's happening is that there's going to be even more. What's been happening is that people stayed with Zoom because it was easy. But Microsoft, Google, Cisco have all been grooming their product. They have been coming up with different iterations to make it easier to have meetings. So what they're saying is that over time, Zoom is going to have more resistance, kind of like Square. They're going to have more resistance to make money. It's going to be more difficult. I'm suggesting that we hold Zoom. It has made us pretty good money. We will continue to watch it, and as of Zoom, that completes all of my comments concerning my stock. Do we have any questions about Schwab or Zoom? Okay, hearing none. That's great. So let us go on to the next section and watch this time.
Now we've lost her.
Well, okay, I'll move forward because I am next on the agenda. Let me see. So we have the watch list. Nicole, of course, is not with us, and Ann dropped off, so that leaves just me. And I have a company called Excel Service Holdings. We've had them since April of 2025. A technology company, medium size, and Morningstar gives them a grade of A. So this particular company, process management company that provides digital operations and analytical services to clients. They operate in 4 sectors: insurance, healthcare, emerging businesses, and analytics. Medium company, Morningstar A, value line gives them a B plus. For sales this year, 12%, earnings per share 14%, a return on equity of 18%, and debt to capital ratio 29%. For the second quarter, they had a strong turnout, $514.5 million. Mostly in their data analysis and AI services. Because of this growth in revenue, they have a 40% increase in their earnings per share. They do have a strategic forecast partnership in the forecast. They're going to team up with another company which will provide international and geographical results. The company is Genesis, which will help them with their customer service and their engagement with customers. They are expecting $1.70 in their earnings per share by 2026. By 2028, it will be $2.30. I was looking at a few of their competitors, which I couldn't place them. Seems like I've heard some people talk about Genesis and how to use them, but the company Salesforce, Nice, let me see a couple of others that I recognize. Cisco, I'm quite sure you guys recognize all of those. Amazon Web Services, that's their new thing using AI. It hasn't flourished very well yet. Um, and something called TalkDesk. So they are in competition with all of these other companies. Hopefully, there will be an increase in their revenues. And and I do recommend that we buy a couple of shares when we have funds available, and we can talk about this company again in the near future. And that's my report on the stock. We have five companies on this list. I want to let this one stay on and look at it in the near future. Did Sharon join us again?
Yes,
Okay, good. Good,
me.
good, good. Okay, Sharon, that's my report on Excel Service Holdings.
Okay, very good. So neither Nicole or Ann, I'm bummed about not hearing about Axos because I Axos is kind of exciting. So
Mhm.
hopefully we'll get it next month and we'll know. Now, this is going to be the next part. We're down to actually doing an SSG. And our one of our potential members is going to present Netflix. Valencia Gibbs. Very interested. Can't wait to hear.
Okay, I've been watching this. Okay, I can't tell y'all how excited I am about Netflix right now because I watched it grow. I remember when it was $333 a share, and I said I should have gotten it. And just to watch it grow all the way up to 1,000 per share is amazing. So what I'm going to do is share the SSG that I did. I did a couple, but I'm going to do the one that I did for today. There we are. Here we go. I'm going to share just a second.
Mhm.
So we all know what Netflix, who Netflix is and what Netflix does. I don't know if you all remember when it used to be $7.99 just to do the streaming services. And we were so excited. We were afraid of it because we were mostly afraid of it because we didn't know what to expect because we were so used to going to Blockbuster, going to pick out our movies and it was like a family experience. And then of course came the Red Box and all this other stuff, all the other places where you can get DVDs, which I'm sure some of us still have a lot of them. And I still get them if I get a chance to get them, not like I have any place to play them. So I guess that, yeah. So anyway, so when I was up the other night, I initially sent it was two companies, and I think you actually you all have one already secured. And I was like, but when I was up in the middle of the night, and that's what I do sometimes, I'll watch this guy Chris Sane on YouTube. And he mentioned he was talking. Then I went to the Millionaire Trapper or Trapper Millionaire, whatever his name is. And he was like, Netflix is going to do a 10-to-1 split. And my eyes got big. I opened up Better Investment. I was like, what type of company is it? Because I never really took a look at it. I just knew that it was cheap and it was growing. So I never did an SSG on it. So this time, I reached back out to Mr. Retha and I said, I want to do Netflix. And I thought this would be so great. So I'm going to walk you through the one that I did today, but I also have one saved from Friday. So, but this is the one that I did today. I updated the historical sales. They said the analyst is seeing 14%. So I kept it at 14%. Typically, I will bring this down because I'm really conservative, but I kept it at 14% of what the analysts were saying because I kind of know that based upon the historical portion of it, 21.6, that's the average. I think we're going to be somewhere about there too. But before I do that, let me give you some history on the company again, before I go back into that. Netflix is a streaming service. Morningstar gives it an A, a grade A, and it's in the entertainment, and it's a large company. It just started in 2022 offering ad-supported plans, which I don't know about you all. I just like the original Netflix where that's all it does, because all it does is just do streaming. But I can find just about any movie on Netflix. So this has been the only thing that they offer. There's not any, they project, they have really good sales. Actually, their current ratio is just at one, like 1 to 1, only because they have 9.3 billion in cash and 14.3 billion in debt. So based upon that alone, and they've been declining in debt ever since, for the last 5 years, declining. And the trend clearly is going down, but they don't anticipate incurring any more debt because of where they stand in terms of a company in its whole of what it does, because it pretty much, they don't have everyone has a streaming service, let's put it that way. And you can't open up when you go to, what is it? The other, what is it? Gosh, I'm looking at the television now. When you go and you turn on, even some TVs are built in, you got your YouTube, you got all types of apps, and
Welcome.
so you even have with Prime, but Prime has even upped their game. But Netflix has cornered the market. It seems to be like one of the #1 places where they want to upload their videos to stream, and even series. I can catch the old things like Girlfriends and other Insecure, which Insecure is not just on Netflix, but it's also on HBO. So although those are the actual distributors of those companies, of those movies, I'm saying movies, companies, movies, Netflix, that's all it does. It doesn't do anything else. But since 2022, they've changed their prices. And of course, I still pay for the non-supported ads because I would still like my ads. And I'm pretty much like everyone else, especially when they started cracking down on sharing the password. Now they give you an opportunity to have passwords, or have, I think, ever so many, like I think it's 5, because I know my daughter, and we're always traveling with it, and that's the beauty of it. You get to travel with your streaming service too. So I have it on my phone. My husband has it on his phone. We could stop at any time if we're doing stuff. So Netflix has really opened and cornered the market on the streaming service, and they don't seem to be slowing down. So a lot of things that are reintroduced to the movie industry is what makes it so exciting, because I can always wait. They give you, they have their own movies that they produce now, so that they have the exclusive rights to. So this Netflix is a no-brainer for me, and especially after really doing the SSG, I really fell in love with the company, and especially having this opportunity to get in. So I don't have to pay $1,000 for one share, even though if I paid $1,000 for one share now, I'd much rather wait for the split, because I'm anticipating the split to at least come in at a 111 at the very highest, but also will like for it to pull back a little bit, which I think I can get it for like 101, may even drop down to $90 a share. That's what Amazon has done, Google has done, Shopify has done. Each time that there's a split, they usually pull back. Even they'll pull back even after they've done the split, which means you can get it in a little cheaper. So when I did the SSG, I did 14% for the estimate of sales growth, and I also did 20% for the growth rate forecast. The analysts are predicting 28%. Again, now this time I stayed conservative, again, because I believe in Netflix. And after we finish this, you'll kind of believe in it too. So anyway, so then I updated the SSG. Then I went over to the valuation and returns. But before I go over there, I always take a look to see what's happening here. Hold on a second, let me move this out the way. I always like to go see what my equity is going to be too, my return on my equity. And it's 28.2%. That's the average in the last 5 years. That's important. So when I go over to the valuation and return, I took out the outliers in the PE. And I also will peek at the 10-year, but when you look at the 10-year was crazy. But again, it's the company that it is that but it's a lot more, I want to say, consistent now. And so I went back to the 5 years. Take this, move this. I did 5 years and I took out the high PE of 94.6, and I took out which would seem to be a relatively lowest one, which was the 16.4, which gave me a ratio of 45.9. I then I went over and did my average high PE, which they have the average high is 53. Again, I'll go a little conservative, and only because I can see the 5-year average, but this is the high that it's been. I kind of went in between. And if I did the 53, it's still I did the high at 46. And then I did the low at 34. I did stay consistent with the low because I want to know, people will buy this based upon knowing even now what the split is going to be. And it had gotten as high as 1,300 per share, which was phenomenal. And now we're back down to $1,098 a share, but we're hovering about $1,100 a share. Updating the study, it comes in the buy zone. I looked at where at on the buy zone are we? We're up there kind of high. So even if we were to go up and was 1,100, we still would be there. I think that this is a pretty decent one for me, but only because although it's higher up in the forecast area, it's comfortable. And for every dollar that is invested, $4.1 is earned in returns. And then, of course, they do not pay out, unfortunately, dividends. And there's no talk about ever, but they do have a repurchase program. I think I read something about the shares. They do have a repurchase share program. Any questions?
I don't. I find that very exciting. I'm sorry. I cut somebody off.
Go right ahead, Mia.
Oh no, I was just saying I don't have any questions either.
Okay, I have a quick question. It's Doretha.
Mhm.
Valencia, did you say you would prefer waiting after the split to buy some shares?
Yes, only reason why I will wait till after the split to buy the shares, because I know they'll likely pull back a little bit. So if it's split today, and it would be like 109 or just say $110 a share.
Okay.
Typically, what happens that it will come back, especially it throughout the day. I would put in an order, and I get in trouble with this with some people. They don't agree with me. I would put in an order for $105 a share.
Oh.
That's only because things are happening throughout the day no one ever takes a look at. And people buy options, and options is what drives a lot of the stuff in the background, a lot of the noise. And it can actually, I've watched a stock go from in one day, still sell at the height of its highest, but I've seen it go below the lowest of when it comes in. So if it opens up at $90, I've seen it go up as high as 95, and then pull back on the same day to 89 or even 88 and go right back up to 95. But that's happening when we don't see it because it's happening in real time. So putting in that order, I could snag $105 a share.
Mm.
So throughout that day, there's someone that's got some options, feeling like thinking what I'm thinking and willing to willing to gamble on that, because that's all it is just really doing a gamble on whether it's going to go up or down. And it can come out the next day and drop down as low as 103. We won't see it, but it can also drop it. But I like to watch it come back down. If it can get down to 105, yeah, I'll snag it. But I'll snag it at 109 too. But I will do the initial order and mark it. And then I would come back and I put in some orders, or at least one share at a time. And I would tell it I want one at 105, or I might just do, yeah. I pretty much kind of drive it. I hope I didn't get you too much out. I get so excited about this stuff. I
A good
know.
strategy. I love it. A good strategy. Thank you
Yeah.
so much for sharing. Good
Mm.
strategy.
You use limit orders.
Yes.
Okay.
Mhm.
Yeah, do a lot of them too. And sometimes you have to wait, but that's okay. Waiting is good.
Yeah.
The only other thing I was going to add, a lot of people don't get excited about the splits, because they're saying in actuality, you're really not getting that much because is exactly what you're saying. It is just splitting it up. You anyway, I'm just saying. I think that that's a good strategy. And when it does split, we'll just go ahead and buy it at the hundred and some odd dollars, and
Mhm.
we'll watch it. Now that is my. I'm adding this. When Nvidia split, I am so sorry that I did not go
Me
ahead
too.
and buy it after when it became, affordable.
Yes, me too.
I'm not saying that it wasn't affordable, it was good value. But that guy is a total genius.
Oh, for NVIDIA?
And he's been able to, yep,
Yes. Yes, 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 yes.
he's total,
But I buy
he's
fractions.
total genius.
I still buy fractions at what it is. It just went over 200, right? And it pulled back to 190 something.
Mhm.
We have to
But
talk about,
you're breaking up.
we have to talk about, sorry, we have to talk about doing that because I haven't seen how in Schwab they allow me to buy a piece of a share.
Oh, yeah. You
Or are you going to
change
actually
it.
do? Okay,
Change it.
I'll
Change
try
it.
that.
Not with the dollar. So you can go with the dollar, or it should be an option. Now, I don't know. Okay, you're saying Schwab, because I got like I have four investment platforms that I use. So
Mm-hmm.
each of them, and Chase is one of them that I use. And what I'll do is I'll just tell it, I'll switch it, but you have to know how to switch it. You can go from dollars and
Mm-hmm.
shares. And so look for that part
Mm-hmm.
because it may already be there because I couldn't see why they wouldn't allow you to do it. And matter of fact, if I probably
Okay.
look at AI, it probably is a way of doing it. But
Okay.
Nvidia went all the way down to what was it, 80,
Yep.
$85, $84 a share this year.
Yeah.
That's what I was sick about. I was like, I'm not paying attention. I could have got some more.
No, I have a friend made, he said scary money on it. So anyway, that was very good. Uh, so that we're gonna go to shop us and start buying pieces of it, not maybe not a whole share, but I need to have it. And Taiwan semiconductors too. I gotta look at my list. I'm not in Alton. And so I don't have my full list. Those are two that are a must have in your portfolio right now. And I don't have either. So very good. Thank you so much. I appreciate that.
Thank you. I enjoyed that a lot.
Doretha?
Yes, I enjoyed it
Yeah,
too. Yes,
yeah.
very good, very good. Um, you need to see the next item on the agenda. Very good, Valencia. Thank you so much for that. Let me see. So, we do stock purchase discussions. We do have a quorum, but I don't think anything was recommended to purchase today. Sharon.
Right.
Okay.
Oh, so we have a quorum, have 3 people. So you're saying that's a quorum?
Yes, ma'am.
We're losing Nicole, we only are lost Nicole and Ann. Okay, so well, hold on. Will any of yours buy?
None of mine were, most of mine were a whole, all of mine were a whole except for EXL. Now, I didn't show, I didn't do an SSG, and I would prefer to do that. I'm not prepared to do that tonight. I do know the front page is up straight and parallel. And the analyst said hold, I said buy. So I would prefer in the executive meeting, we can take a quick look at it again and make a decision, okay?
Okay, it may be Swab too, but Swab is definitely a buy. I did not do full SSG on Swab, but the analysts are saying that it is a buy.
Okay.
Okay, so maybe we can look at that also, and maybe we can look at, oh, let me ask you, we need to think about this. If we can't afford to buy a share, okay, so the deal is, the recommendation for Valencia is to wait after the split and to
Right.
buy. How many shares, Valencia, are you recommending that we buy of NVIDIA?
Oh, on the video or Netflix?
Yeah, Netflix, sorry.
No worries. If you could afford, I'd do the whole 10, but if you can't, at least 5. At least 5.
All right. Okay, so we will put that on the agenda for the next time.
Mhm.
And for next month, to consider buying 5 shares of Netflix, because it'll be after the split.
Right. And I think the split takes place on the 17th, if I'm not mistaken. Yeah.
Yeah,
I
right.
have the 14th, so it
Oh, you had a
might
14? Okay.
the 14th,
Okay.
that's what it says. Now, when it comes back up, which makes sense, which would be that Monday,
Mhm.
that's when I see it too. It's the following Monday.
Okay.
So yeah, but yeah, it's supposed to occur November 14th. I got it on my calendar. And
Okay.
the whole family sees that. Oh, is that what that's for?
Yeah, I mean, you have to have possession of it by the 10th, I think, but still, I guess the split happens after that. All right then. Okay, so Valencia, I am sure that Doretha or someone has already talked to you saying that I believe with this, she completes all her requirements, right?
That's correct.
Okay, so we will discuss when we can accept you into the club. Is that okay?
Awesome. Yes, 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 yes.
Okay, great, great. All right. So, Mia, we are going to be working on you next because I think you're very close to completing all your requirements too. So we need to start scheduling you to do your book review. And well, you tell us when you want to do your book review and when you want to do your SSG, because you are on track also to be a member. Now, what's next on the agenda? I don't have it up. I can't see it.
I wanted to ask Mia, did she have any comments? Would she be prepared to, our educational meeting is coming up, and I know you probably had a conversation with Nicole, but our education meeting is coming up next Tuesday, the 11th. Would you be prepared to, you want to do something on that day, your book summary, or is that too close?
Well, I actually will be on a plane that morning during the meeting. I
Oh,
think I have a 5 a.m. flight to go to Florida.
okay. Awesome,
I'm going
awesome.
to Miss Ann's Niche to Be Rich event. So
Oh, you are?
I
Awesome.
am. So I will unfortunately not be on the education call on Tuesday morning because I will be. My husband asked me, "What did you get a flight that early for?"
That's it's
That's how
all
the cookie
good.
crumbles sometimes.
Yes, it's all good. That's awesome. Okay,
It
well
is.
then we'll catch you the next time.
Yes.
Mhm.
Okay, how exciting. That's great. All righty then. So what's next on the agenda?
Okay, we have old business and then we have new business. And I don't have anything listed under old business unless you thought of something since we met.
No.
Okay, so new business, save the date. Uh, I'm going to share that really quickly. It is the Bink is coming up for 2026. Let's see, and it is going to be held in Chicago, April the 23rd through the 26th. And more information is to come. I didn't see anywhere if it's in person or as it was last year. I think they had it virtual. And so we just want to put it on our calendars. And I guess as the date gets closer, we can make a decision about what we're going to do. But yes, that's to save the date. The
Okay.
Beak. Mm-hmm.
Well, since it's in Chicago, I'm going to try my best to make sure that I go.
Mm-hmm.
There's so much in Chicago. I'm gonna say this, and I don't know that we're supposed to, but if we all go, we I just hate the idea of being in Chicago because there's so much to do. One night we need to go out, do something else, and see Chicago.
Absolutely.
The airport. Yeah. So anyway, I'm going to try and do that,
Yeah.
and I'll put it on my calendar. And I know that I'm assuming that by December the government will be back in. I can start making plans for vacation for next year.
Okay.
Anyway, so how exciting! But I'll try to make that Chicago.
Yes, absolutely. So our next general meeting will be the first Thursday of the month, December 4th. We have an education meeting coming up November the 11th, and then our executive officers meeting is November 18th. You can put all of that on your calendar. And congratulations again to Valencia. We're so happy to have you on board. Mia, looking forward to your next steps toward becoming a member.
Mia, I'm excited because I know you were the lady that saved us when we had that
Yes.
hacker.
I'm
I,
excited as well.
Yeah.
and I'm going to tell you, I was in a Zoom meeting and there was all these old heads that were, and they're younger than me. I don't even know why I said old heads, but they were on a Zoom meeting trying to make a presentation and they had technical problems. They didn't know what to do.
Wow.
And I said, we need Mia. So anyway, I just want I
Yes,
know that I've said it before that I appreciated what you did,
absolutely.
acting in the hour, right?
Yeah.
So anyway, we're looking forward to the vote to add Valencia now that she has completed all of her requirements,
Mm-hmm.
and we're looking forward to you. Okay,
Absolutely.
alrighty.
Absolutely.
So now that I have that talking. Do we have other guests that we need to acknowledge that would like to come off mute and make any comments, ask any questions, make any comments? I do see that we have guests. All right, we're not going to force anybody. I just wanted to make sure that you knew that we're glad that you decided to come and spend part of your evening with us.
Mm-hmm.
And we wanted to at least give you some acknowledgement if you had any questions or wanted to make any comments. If there are none, then I am going to entertain a motion to end this meeting? Do we have a motion?
I make a motion that we adjourn the meeting.
Okay, great. Do we have a second to that motion? I'm going to second that. Do we have any discussion? Want to stay on in this meeting any longer? Do we have any discussion about the completion of the meeting? All right, seeing none, all in favor of completing the meeting?
Aye.
I
Aye.
Thank you so much for coming on.
please, I'm not excited to end the meeting, but guess what? I have a presentation to make it by 8 o'clock on the same Zoom, on the same Zoom.
Wow. Okay. Awesome.
I was just about to say that, Miss Carolyn. You're up next in 15 minutes. You zoom on to the next meeting.
Yes.
Yes.
Good. Now I thought I saw Natasha come off mute for a hot second.
She sent
Okay,
a
very
message
good.
in the
So
chat.
we're gonna-
There she is.
Hi, everyone. Thanks for the content. I'm not a member. In fact, I mean, my exposure to construction was actually stemmed from many years ago. But I came across the group recently during the Congressional Black Caucus set of events. So I attended one of your presentations in DC. So I ended up finding myself at least being aware of your get some of your gatherings, and I wanted to learn about some of your committees.
Oh, okay. Nabwic committees.
Yes.
Okay, very good. Well, yes, we are a creature of Nabwic, so we're hoping that you will come back again. We want to make sure we extend that, and you can extend your understanding of buying stock. That's very important, honey. Very, very important. Okay,
Thank you.
so
I definitely enjoyed the conversations, and also it's kind of very I want to say inspiring that people are actually participating in the markets instead of just observing.
okay, very good. Well, Doretha's already put it on your calendar as to coming back. If you would like to come back on the 11th, that would be great. I'm not sure where you're coming from. Or if you would like to come back to next month's meeting, put that on your calendar and we will look forward to seeing you. Okay?
All right. Thank you.
Okay, thank you. Okay, seeing no other conversation, we can adjourn this meeting. Thank you so much, ladies.
Thanks, everyone.
My pleasure. All right. Take care. Bye-bye.
Bye. Thank
Bye,
you.
everyone.
Okay,
Bye.
bye-bye.